Good morning. Welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses. If you have any questions, ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. During the live session, we will be running a poll, so please do engage with it, and I will reveal the results at the end. My name is Zeeshan Masood, and I work as Head of Strategy at Morgan Reed Chartered Certified Accountants with our offices in London, Birmingham, and Manchester. Today, I will be discussing with you the UK's tax position in relation to crypto assets. So the topics I will be discussing here, what are actually crypto assets, and what is Hmrc point of view on people who are holding crypto assets, and when might a capital gains tax liability arise if you are doing crypto asset activity? When will an income tax and national insurance liability will arise if you trade in crypto assets? When might a corporation tax liability arise if a business trade in crypto assets? So why it is important to keep proper records, what evidence you need to keep while calculating your tax liability if you're dealing in crypto assets, what types of and what are the risks associated with if you are dealing in crypto assets. So to begin with, what are crypto assets? Crypto assets sometimes described as token, coins, or cryptocurrency. A crypto asset is a digital representation of value or contractual obligation, which can be stored, traded, or transferred electronically. So what is Hmrc's point of view on crypto assets? So the tax position will depend on a number of factors, such as the level of activity involved, when the crypto assets were acquired, and what happened to the crypto assets in your possession. So when might a capital gains tax liability arise if you deal in crypto asset activity? First of all, if you sell your crypto assets for money, the corporation tax liability, the capital gains tax liability can arise. When you exchange one type of crypto asset for another type of crypto asset. Similarly, with the exception of your spouse or civil partner, if you gift your crypto asset to another person, so when you lend crypto asset either directly to a borrower or through decentralized finance lending platform. When does income tax liability arise if you deal in crypto assets, or if you are carrying out crypto asset activity? First of all, when you receive rewards from mining, skating, or airdrops, such as receiving free or under or below the market value crypto assets, or share in future transaction fees. When you like capital gains, if you lend crypto asset either directly or through decentralized finance lending platform, an income tax liability can arise. Another point which is very important is when an income tax liability and or national insurance liability arise, when it can arise if you are trading in crypto assets. If you receive crypto assets as a result of your employment, then income tax liability and national insurance liability can arise. When the level of your crypto assets when the level of your activity in crypto asset could be deemed to be trading, then income tax and national insurance liability can arise. Now, in relation to corporation tax liability, when corporation tax liability can arise if you are trading in crypto assets. When the crypto asset activity is conducted through a company. So if you are running a company and you are trading in crypto assets, then corporation tax liability can arise. When the business sells goods or services in exchange of crypto assets, then corporation tax liability can arise. When the company buys or sells crypto assets, then it can arise. When the company exchange crypto assets for other assets, for example, other types of crypto assets, when the level of company activity in crypto asset could be deemed to be trading, then corporation tax liability can arise. When the company lends crypto assets either directly to a borrower or through decentralized finance lending platform, then the corporation tax liability can arise. So why is it important to keep proper records? First of all, to enable you to prepare and declare proper amount of tax in your tax return and accounts. It is important that you keep proper type of record, proper set of records while dealing in crypto assets. And if you want to claim any substantial losses in while trading in crypto assets, then again it is very important that you have proper set of records available with you. Similarly, if HMRC instigates an inquiry, then it is very important that you have proper type of records available with you so that you can satisfy HMRC's inquiries and investigations. So what type of records should be kept? You should keep your own record for each type of crypto transactions. Some exchanges only keep records for a certain amount of time, and it is likely that when you are at the time of preparation of your tax returns, it may no longer be available. So it is very important that you keep proper record of your each crypto transaction. You should read you should retain your cold and hot wallets, as they have private and public keys. Crypto assets are digital assets, and therefore all records in wallet should show your balances and the amount of transactions, either in full or via in reference to public blockchain. Other records of transactions and balances, such as downloads from the wallet activity from a crypto exchange. Most exchanges will allow you to download the records in CSV format. And you can also use crypto asset portfolio tracking apps such as Coin Tracker, Blockfolio, Crypto Compare. So these apps are normally you can link these labs with different exchanges if you're dealing in crypto assets trading activity. Similarly, bank statements showing the inflow and outflow of fiat currency into cryptocurrency. So it is normally, I would suggest that it is normally preferable that we have a separate dedicated accounts where all the activity in relation to the crypto asset is going through. So what type of evidence is required while when it comes to preparation of tax return, your personal tax return or corporation tax return? First and foremost, the most important thing is that you should know about the type and number of crypto assets you are holding. Okay, details of the nature of the transactions involved and when they took place. How did the crypto asset come about? Either through acquisition or through mining, through airdrops or forking, for example. The value of transaction in sterling at the time when the transaction took place. That is very important, that you should know the value of the transaction at the time when the transaction took place, the level of fee received or incurred, and the nature of those fees. Similarly, if where lending is involved, you should keep the details of the loan agreement. If you are arguing that there is a trading activity taking place, then there may be need to demonstrate to HMRC the degree of activity, the risk, the commerciality, and the level of organization involved. Now, if you are, if you're dealing with the crypto asset activity, then you should be aware of certain risks which are associated with that type of transactions. So first and foremost is the risk of fraud, theft. For example, some people are paid to look after your private key, and it has happened in many instances that those people have just run off. And as a result, the person who actually owns the crypto asset, they could not access their wallet, and because they just gave away their private key to another individual. Similarly, where the wallet is lost or destroyed, it may also result in you, as the owner of crypto asset, being unable to access them, as you no longer have the private key. some investments, they advertise high returns, but they're not regulated. So you need to be aware of that. Similarly, significant crypto assets are inherently are price volatile, and combined with this price volatility, there is an inherent difficulties of valuing them reliably. So so these two factors actually place the consumer on a high risk. And there is another point which is very important, that there is no guarantee that crypto asset can be converted back into cash. Converting crypto assets back into cash depend on the demand and supply existing in the market. So if there is no demand and supply in the market, you won't be able to convert your crypto asset into cash. Charges and fee. You will see some people will charge the charge and fee may be more than the regulated investment products. And marketing materials. Some firms may overstate the return or understate the risk, and that is again another risk associated in dealing with crypto assets. And last but not the least is if an HMRC inquiry can occur. So it is very important that that you keep proper records. So should HMRC instigate an inquiry, that then you don't need to worry about from where you're going to get all the information from if you have kept all the records properly. So from and it is also very important that you keep your records for at least 6 years. From regulatory point of from regulatory and compliance point of view. So this is the end of my topic out there, because it is an evolving area, and there's a lot to be discussed. There's a lot which can be discussed, but because of the time restraint, so I've tried to face through the main basic points in relation to what elements you need to consider, or what areas you need to consider if you decide, or if you're already maybe trading in crypto assets. So I have questions coming in, so I will start dealing with the questions. And first question is from Zoe on Instagram, and Zoe has asked, I have been overpaid by 2 months on my last contract. They are now asking for a gross repayment, but taxes were automatically deducted from my net pay. Do I owe them the gross or net repayment? Okay, so in terms of if you have been overpaid, so you need to give them the amount of overpayment they are saying that you have been overpaid. So the way you need to look at it on your pay slip, you need to look at what net pay you should have received, and what they have paid. So they should be telling you the amount, actually exactly. Your employer should be telling you the exact amount. It's not a question of gross or net. They should be telling you the exact amount on your pay slip. So if you look at your previous pay slips, then you should be able to check what should be your monthly net payment you should be receiving, and what they have paid you. So if they have overpaid you, they should be able to tell you the exact amount. The next question is Fred on Twitter. Hi, Zeeshan. I think cryptocurrencies are super exciting, but I do not really understand how blockchain works. What makes it valuable? So in terms of blockchain, basically what it is, basically blockchain is an application of distributed ledger technology, basically, which act as a public record of all the transactions that have ever taken place in respect of that particular cryptocurrency. So it is a public ledger, and when your question is what makes it valuable, it's not about the valuation of blockchain. Well, basically blockchain you need to look at from a different point of view, that it is actually a public ledger, and they're using technology to keep record of all the crypto asset transactions which are taking place in a particular span of time or particular type of crypto asset. Karen on Facebook Messenger, another question. I've noticed recently some of my competitors have lowered their prices, and I have no idea how they're doing it, but I want us to be affordable. what could we be looking at to bring our prices down to? First of all, you need to look at your expenses. Okay, if there are any expenses which you can cut, then try to maybe reduce those expenses. Secondly, try to negotiate with your suppliers. It is very important. The where you're buying your products or services from, try to negotiate with them, because this is where you can save some money in terms of, and then offer affordable prices to your or maybe not affordable, competitive prices in relation to your competition to the customers. I would suggest these are the two areas. I would put maybe negotiation with your suppliers at the top, and then looking at other areas of business expenses where you can try to save some money. Jamil on Instagram, I heard that if you store your assets on an exchange platform, you're not liable to be taxed because you're not the outright owner, and tax depends on where the asset is held. Now, this Jamil, as I explained in my in my initial talk, the question of tax liability arises when you sell crypto assets for money. If you have stored somewhere, obviously if you're dealing in crypto asset, you have to store it somewhere. But in terms of looking at how that when and how the tax liability is going to arise, you need to look at what you're doing with those crypto assets. Are you selling them for money? Are you exchanging them for other crypto assets? Or are you maybe gifting them to someone else? Or are you lending them to someone else? So these are the points which will help you understand whether a tax liability is going to be arising or not. So it is not a question about where you're storing this. Isma on Twitter, the crypto markets are volatile, yet there are massive gains to be made. How should we assess risk when it is constantly changing? So this is, you need to keep a close eye on the market. It is like anything else. It is. So if I give you an example of, for example, if you may be in a different market, you may be in a market of selling computers, you may be in a market of selling gold. So it is like any other market. You need to make sure that you're aware of the risk associated in trading in a particular kind of market, and you need to keep yourself abreast with the changes taking place. You need to read a lot, because and see what is happening. Nobody can guarantee you like you're going to get a guaranteed return. Yes, they are volatile, but then higher the risk, higher the gain. But again, it is something you need to be really keep a close eye on what is actually happening in the market, and make informed decisions rather than just blindly following the herd. And Shirley on Facebook Messenger, I'm a small business owner, so crypto seems a world away from me. Will there come a point where we will have to consider taking cryptocurrencies for payments, and how do we go about doing that? Yes, it will. There will come a time, but I don't think it will come in next 6 months or a year. It will take few years for people to start, especially in UK, for businesses to start accepting cryptocurrency as a means of a currency to buy and sell goods and services. It is very hot in States, but in UK it is gradually the phenomena is gradually happening. It is not as hot in UK as in and USA. Haiti on Instagram, I have been interested in crypto trading for a while and want to make more money on crypto. Can you store cryptos in your bank account or no? And if yes, any recommendations on who to go with? So this will constitute an advice. I'm not going to go on that route. But in terms of cryptocurrencies, obviously they are stored in exchanges. I am not personally aware of any banks who are offering high street banks who are offering these services. So as far as I know, you can only store cryptocurrencies or crypto assets in exchanges. Brianna on Facebook Messenger. I've actually purchased some Bitcoin and Ethereum over the last 2 years, but the value is relatively small, around 2K and £700 respectively. I didn't really consider I could be taxed on it. When should I be declaring these? Again, Brianna, it's a very, very good question. Very good question. Now, as I explained earlier, in terms of assessing whether there is any tax to be paid or you're liable for any tax, you need to consider a few things. First of all, have you sold these assets, or are you planning to sell these assets for money, or are you planning to exchange these assets for another type of assets, or are you planning to gift it to someone, with the exception of your spouse or civil partner, or are you planning to lend it to someone? So these are the things you need to see. If they're just sitting there and doing nothing, then I don't think so there is any question of any tax liability. But again, as I explained, you need to see what are you doing with those crypto assets in order for you to assess whether there is any tax to be paid on them or not. Lily on Instagram. We have now mostly come back to the office. However, the lease is up in a year, and actually most of our team were able to effectively do their job from home. I feel as though we could be saving a lot of money without an office. Is there anything we should consider before deciding this? It's again really a very, very good question in post-COVID world. Yes, a lot of businesses are making these choices. What they have realized during the pandemic, that what's the point of having such a large office space and paying huge amount of money on rents and rates every year, while the same job or operations can be done working remotely. So in terms of I don't know the exact details of your business, what type of business you're involved in, but you need to see from operational point of view, is it sustainable for you to allow people to work from home? That is very important. Is it sustainable? Is it practical? And is it doable? Yes. And another thing is about engaging with your staff. I would suggest that engage with your staff, communicate with your staff, have a discussion with your staff members, and see what they feel about it. And third thing is, again, in terms of if you're allowing staff, if you're asking staff to work from home, so have you provided them with all the equipment and the necessary tools in order for them to operate efficiently while working from their home? So these are the few things which I believe you should be considering while making this decision. Khadija on Twitter. Khadija has asked a question: do you have any advice about platforms such as Binance, FTX, or Coinbase? Any red flags to watch out for when selecting a cryptocurrency exchange? Khadija, unfortunately, I can't advise you on this, because this is this is something, this will if I did say something, this will constitute an advice, and I'm not in a position to advise you on this. It is your personal choice, and I would suggest just do research on each of these and try to read as much as you can to understand how these exchanges work, and how they actually work, and what are the pros and cons. So it is something which you have to decide yourself. Nadia on Facebook Messenger. We created a new LLC to manage portfolio of websites that we previously owned by me as a sole trader. And I want to migrate the website domains to the LLC for tax reasons. What do I need to do? How does the government know what is owned by a company when it is a non-physical asset? Non-physical assets are called non-tangible assets, and they need to be reflected in your balance sheet. So if you are making if you want to transfer any non-tangible asset to a company, you need to speak to your accountant, who will be able to advise you. It is about getting the valuation of the assets and how these assets can be transformed into your limited LLC business, uh, and it is about the valuation of those assets and then transform on and reflect those assets on the balance sheet of LLC. So it is something which you need to discuss with your accountant. Sophie on Twitter: I frequently travel and would like to create an expense report in QuickBooks for all purchases related to each trip. Is there a streamlined way to do this? Yes, you can create expenses report in QuickBooks. You can use projects or class. There is a feature in QuickBooks called classes, and there are a number of features which you can use on QuickBooks actually to create. But it depends. First of all, you need to. I always try to explain to my clients that try to keep things simple, not overcomplicate them. First of all, you need to understand, or you need to ask yourself, why do you need why you need this functionality, like why you need to create a separate stream of expense for each type of expenses, or if you're traveling abroad, why do you need to do that? But there is definitely a functionality in QuickBooks which you can use. Okay, so now coming back to last question, then I will discuss our core results. Connor on Instagram: what is the best way to handle transfers to and from personal bank accounts? I know it is something we shouldn't be doing and I've stopped, but initially used this route for my expenses. As far as I could understand your question, you're asking you from personal business, you're talking about the transfer between personal and business bank accounts. Always make a reference what type of, why you like, so that you can easily identify why the transfer was made. If it was in relation to your salary, put a reference salary. If it was dividend, then put it as a dividend. Similar vice versa. So if you're transferring money from personal bank to business bank account, you need to make a reference why you're giving money to your business. So the poll results have come back, and so the question was, do you or your business own any crypto assets? 20% of you said yes, and 80% answered no, which is completely understandable because, as I said earlier in my talk, that it is cryptocurrency, holding crypto assets or cryptocurrency. It is fairly, it is holding its ground at the moment. In UK, it is not as hot as in USA. And I believe in coming next couple of years, more people, I will, maybe the results will be opposite, where 80% will be saying that yes, they hold crypto assets, or businesses will be saying, or individuals will be saying that they hold crypto assets. But it is a very new area for us accountants, and plus also general public alike. Thank you. So thank you all for tuning in. And if you want to get in touch with me, get in touch with us, you can email us at quickbooks@morganreach.com, or visit our website, morganreach.com. We'll be very happy to help. So coming up on Ask the Expert tomorrow is franchise owner and founder of Didi Dance, Anne-Marie Martin. So tune in to find out why female entrepreneurs should consider franchising their business. A reminder that if you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. I've really enjoyed answering your question this morning. Have a great day.